settlement statement at the closing table is probably the most important document as a borrower or a buyer of a property that you're going to have. Hey, it's Kevin and Amalsh, Pine Financial Group, where we work together so you succeed. You found us here on Facebook, you found us here on YouTube. Please hit like, hit subscribe. We're trying desperately to build a channel here to help more real estate investors just like you. By you subscribing, we can help get some traction and build a bigger and better channel. I want to talk today quickly about settlement statements. I've been getting a lot of questions recently about settlement statements and how to read those and how do you know where the money is going. You know, the settlement sheet or the settlement statement at the closing table is probably the most important document as a borrower or a buyer of a property that you're going to have. It details where all the money is going. So I think it is important to understand that as a real estate investor. So let me share my screen here and go through a couple of settlement sheets to help you understand exactly what you're looking at the closing table. All right, this first one is probably as simple as it gets. It's just a one-page settlement sheet. Whenever you have the settlement sheet, you have two columns. You have a debit column and a credit column, which you can see right here, debits and credits. And this trips investors up from time to time. When you're thinking about debits and credits, you're thinking about it as it relates to a settlement sheet from the title company's perspective, not your personal perspective necessarily, which I'm going to show you in a minute. So a credit is money coming into title or into escrow. Debits are money leaving escrow, so actual checks that the title company need to write. Okay, so you can see here that the credits, if I just go through this quickly, you have the new loan. So this is the loan from Pine Financial Group. It's coming from PFG Fund 5. So that's the new loan amount that we wired into the title company to fund this deal. And then you have your tax credit. So, you know, taxes are paid in arrears, meaning you're paid 2021 taxes in 2022. So if you're buying a property now, as I shoot this video, it's December of 2021. So you're buying it in the middle of the month. Anytime in December, you're buying the property, you're going to owe taxes for the entire year of 2021, even though you only own the property maybe 2 weeks. So the way that is accounted for in the settlement sheet is they take the full year, prorate the taxes, and then give you a credit for it. And then it's your obligation to make that payment in 2022 for the previous year's taxes. So that's why you're going to see a tax credit on the settlement sheets. And then this one is the earnest money. EM is earnest money. So that's your deposit or your earnest money held in escrow when you put the contract on the property. So all of these credits, just the three, add up to $512,991.49. Now you have all the debits. So you have the purchase price of the property, you have the fee, this is our fee for the hard money loan, prepaid interest. You have all of these other closing costs. This is a closing cost reimbursement. So the seller didn't pay closing costs. The buyer paid the seller's closing costs in this example. And I'm not going to go in detail about all of these, but you could just see going down the list, each and every little fee that the title company and anyone else is going to charge you to buy a piece of property. And that comes to $577,684. So you can see that these are not in balance, and the debits and credits have to balance. It's the only way it works. So in order for these to balance, the $64,693 has to be credited to the title company, which is why it shows up in the credit column. So it's a balance due from the buyer. You, the real estate investor in this example, would have had to bring in money of $64,693.39 so that these two columns balance. So I know that was a really short example of how the settlement sheets work, but that's it. I do want to show you another one to give you another example, closer to a no money down type of deal. This also closed really recently. And all the credits, again, you have your earnest money, you have your loan amount, you have your taxes. That should be all. Yep, $2,258,760 is the total credits. Same exact thing, purchase price, the hard money fee, interest, all your title fees, everything else. Oh, this is something that I should have mentioned as well. I'll get back to that. Subtotals, you can see it's out of balance, but just barely. So in order for this to balance, the borrower had to bring in $946 to get this transaction closed. So this is pretty darn close outside of the earnest money to a no money down deal here in 2021. I keep hearing there's no such thing as no money down deals. Well, this one's pretty darn close and it just closed. So I want to come back to these two numbers here, the $1,109,980 and then the $85,000. This is your draws for the construction of this project. So this initial draw, $85,000, this went directly to the buyer, the real estate investor at closing. So he brought in the $946 and he left with a check in this example for $85,000 to give his contractor, start ordering materials, get the project going. The rest of this money came back to us. That's going to be held in an escrow account that will issue in draws. This is a construction loan. The cool thing about our construction loans is you don't pay interest on the money until there's, the set schedule, and you start paying interest on this 1.1 million as you progress through the project. So I get questions sometimes about this 85,000 because it's a check to you as a real estate investor. So a lot of investors will think that's a credit because it's a credit to them, but it's important to know that it's a check from the title company, from escrow. So that's why you're going to see that in the debit column. If you go back to this first one that we looked at, and I went too fast, I skipped right over it, see if there's any construction. No, there's no construction money on this one. So this was our 90% loan where we loaned 90% of the purchase price, and the investor paid the 10% down and covered the rest of the closing costs. And that's why you're going to see such a higher amount of money at closing, because they have elected to put 10% down on this deal. I'd like to know what questions you have about settlement sheets or anything that I'm showing you here today. So please leave me your comments, your questions below. Happy to jump in there, answer any questions that you have. Again, this is the most important document you're going to see at the closing table whenever you're borrowing hard money or anytime you're buying or selling real estate. So important to understand it. Let me help you if you need it. And you could check us out for all your hard money lending needs at pinefinancialgroup.com.